G'day Internet, Max right here, and just noticing some very interesting things in the market today that I wanted to share with you. So I know everyone loves it when any of the YouTube people just jump on here and say Bitcoin's going up or Bitcoin's going down, and I just can't do that right now. There's a lot of mixed signals in the market right now, and I think there's that unease in sentiment is out there, and it's a time for caution. But let me share with you what I am seeing. So on-chain analysis, by the way, is extremely bullish right now. There's a lot of things going on that would signal a cycle bottom that we've just gone through it, and we're about to go on another leg up. The illiquid supply is high, meaning the number of the number of coins on exchanges has gone down. People are putting them in long-term wallets, and the liquid supply is going down. People they're taking them off, they're putting them in cold storage, and a lot of things are setting up to say that there might be a supply squeeze soon. That's going on. Bitcoin is coming up and nearing the top of its range. I'll get to that in a minute. But I want to take a step back and take a look at some of the bad things. So there are some definitely good things in the market that we want to pay attention to. But there are some things that give me caution as well. So we are right now looking at the DXY. It's a reflection of the dollar strength. And if you guys remember, I talked about this a while back, way back here so this is going back 6 months, a little bit more. We were in this W pattern, and let me draw it out for you. It's this kind of a W pattern here, back to here, here, and here. Okay, just so you know what W I'm talking about. And when we were as we were climbing up this, we were coming up to this thing. Now, it was a question to where do you start this W? Does the W start on this line or this line? Okay, and at the time I said I wasn't quite sure, and I'm still not quite sure where the W is starting. But the way you work out a W, when it breaks out of the W, it goes through this top here. How high it gets is given by the depth of the W. It's the lowest point to the highest point on the W. And I drew out these two yellow vertical lines here. This is one. So this yellow line here was from the bottom, I should say the valley, the trough, to the yellow line here. And then you go and put it at where it breaks out, and that should be where the W gets to. Now that's where the W is right now. It actually went above it, hit this resistance, came down, and it is now finding a little bit of support at it, and it's now bounced off. We will get to that in just a moment. The other way to do the W is with the bigger line here, and that's again, you go to the trough, all the way up to the top of the W, which if we're taking the taller W is here. You go to the breakout, and it gives you a target. Probably went a little bit high there. Then I went a little bit low. But nonetheless, it's somewhere up here around about 100, right? Right now, we're at 98. Now, we'll zoom in here a little bit, and you'll see that what the DXY has done the last few days is basically that W played out perfectly. At the very least, the short one has played out and is complete. If it's the taller one, maybe we have a little bit further to go. But the DX climbed all the way up here, as so far it has bounced off this important line of resistance twice. It's come back down to this level here, which was the top of that yellow line I just drew. It's bounced off it twice, and it's headed up and is about to have another crack at this very important line of resistance. To understand the importance of this line of resistance, we need to zoom out quite a ways, and you'll see where that comes from. You know, it's a really important long-term line of resistance for the DXY, all right? You see that pattern there. So here's what happens. When the dollar is strong, as a loose guide, it basically means everything else is selling off. Stocks, precious metals, cryptocurrencies, real estate, all of it, you name it is all selling off, and they are fleeing to the safe haven of the dollar, right? They think there's some trouble in the markets. Let's sell off, let's trim our positions, and let's go into the safety of the dollar. Things will go down. We'll go back and buy them back up again cheaper. That's what happens. That's what it means when the dollar is getting strong. When the dollar is weakening, it is the reverse. No one wants to be in the dollar. You're missing out on all the fabulous gains of Tesla and Facebook and Bitcoin. Let's go into the speculative stuff. It's a risk-on environment, right? So sell your dollars, the dollar goes down, and go and buy other stuff, the crypto, the whatever. Now, it's not quite as clean and simple as that, because actually there's a lot of Forex currencies in this DXY indicator, meaning it trades between euro and the US dollar and other things. But as a really, really good rule of thumb, this is what's going on, and it kind of tells you how it works. So the dollar strengthening, that W pattern was just really, really obvious to me, really, really strong. I made like several videos about it way down here. And so for this entire period, I expected the DXY to just come on up and Bitcoin and cryptocurrencies to be pretty weak, which is exactly what happened in the last 6 months. Bitcoin crypto has been weak, lost some of its value for sure, as have the markets, as have everything else. Okay, that's the catch up. Now we get up to this point, that pattern is now complete and has played out, and or near enough. And we find ourselves at this very important juncture. The dollar is now going up again and having another crack at this very important line of resistance. Okay, let's just leave that there for a second, set it aside. That is the DXY. Let's go ahead and look at, I'm gonna come down a little bit. No, you're jumping around on me, computer. Sorry, my computer's not being fluid. Let's go and look at the Dow Jones. On your time, computer. And you will see this very important line of resistance. And the Dow Jones is now coming up to test it as we speak. Today, it is testing it, right? Let's take a quick look at the S&P. Exactly the same story. It's coming up to test this 21-week moving average. And again, it's kind of up to its channel. If we were to draw this line here, we'll see it's already broken through that kind of line of resistance there. Did that about 4 days ago and has done very, very well since. And maybe that's a leading indicator that all the others are going to break through, right? Or maybe this one just got a little bit ahead of itself and it will come back. But it's right at the 21-week moving average right now. It is also this high over here. And so if this was, say, like a head and shoulders type situation, then it's an interesting situation where we're coming up to a previous high here. So you've got the S&P coming up to a line of resistance. You've got the Dow Jones coming up to a line of resistance. You've got the DXY coming up to a line of resistance. So, and let's go, now it's time to go back with all that, background knowledge. Let's go and investigate what's going on with Bitcoin. So we'll jump into this one here. And we'll see it is in this very, very interesting challenge. And it's kind of in the, channel, I should say. And it's kind of in the middle of this range. There's this slight slope here. Now, I got some really not so good news to share with you. This very much could be what's called a bear flag. Now, a bear flag, what that is in the middle of a downtrend. So here's the downtrend. In the middle of a downtrend, things just never go up and down exclusively. They zigzag around a little bit, right? And this is one of the famous zigzag patterns that people talk about in the middle of a downtrend. It's called a bear flag. So you come down here and then you consolidate for some period of time in a slight uptrend, just like what we've got here. And the way you measure when this pattern completes, once it breaks out and it's complete, you put a flag on the bear flag. Sorry, a flag pole on the bear flag. You see this flag pole? Okay, I'm going to zoom out because we're going to need some room here. Okay. All right. Let's duplicate this line. And the flag pole goes on the reverse side from the bottom of the flag, like that. So what this is kind of predicting, if this is a bear flag, if you see this maybe come up here, it might come up to support, even though to get up there, it's got to get to 45,000. I'm not sure it's going to do that. We would need to see that DXY bounce off and come down. I think you'd want to see the Dow Jones break through its line of resistance as well. And you want to see a few things, in order for Bitcoin to get all the way back up here to 45,000, that's going to be a new high again, which, hey, one, two, three new highs. It could be. It can happen, right? 45,000 if it gets up to that high, cool. If it breaks through, fantastic. We're off to the races. If you start to see it come down, it could be playing out that this is the bear flag. And if this plays out, this is talking about all the way down to $12,000 for Bitcoin. Now, I'm not saying this is going to happen. I'm not saying it's a for sure thing. By the way, there's a huge line of resistance at 30,000 and again at 20,000. So it's got two big legs to go through. But if that does play out, that is something interesting. I'll be buying, if it goes down, I'll be buying some more at 30. I'll be hitting it pretty hard at 20, and I'll be throwing the kitchen sink at it at 12, right? So just so you guys know, if this goes down, I'll be buying plenty more. I wouldn't find it objectionable at all if Bitcoin went down. So what are the scenarios in which it goes down? Well, there's quite a few. So we've got the Fed saying that it is going to control inflation. It's number one thing. The way it's going to do that is to do all the things that's going to hurt the economy, right? So what happened was we had asset inflation. Okay, that was cool. The rich guys got richer. Fun. Now we've got the second wave of inflation, which is the cost of living is skyrocketing and wages are not. The poor are getting crushed and squeezed out. That's the hideous side of inflation. It always follows that first part, by the way, just so you know. And so now you have this situation where the Fed is saying, we've got to crush this inflation. In order to do that, they've got to, the same thing unwinds in the same direction. The first thing that happens is the markets that went up, Bitcoin, real estate, stock market, all the assets that went up, the rich guys got richer phase, all that has to unwind. And there can be a huge market shock if the Fed follows through with its promise to stop inflation no matter what, right? And so there are scenarios in which all of the markets get smashed and you see these, you see Bitcoin back down at 12 grand. It is absolutely a possibility. I'm not saying it's necessarily the most likely scenario, by the way. I want to be clear on that. I'm just saying, because you also simultaneously have analysis from the on-chain data world that says we should see a pump here in Bitcoin here in the next week or so. So I'm just saying there's a lot of guys out there saying to the moon, to the moon, to the moon. I feel like we've consolidated. We're about to go ballistic. That could well be the case, but there are some reasons to be cautious. It's not a one-way street of optimism as far as I'm concerned. There are some good signs there, but there's also some reasons to be careful. So I just wanted to share that with you in case you're watching too many Moon Boys and you get all excited and you put next month's rent on Bitcoin going up. You might want to hold your horses and not be so risky at this particular point in time. What do you think? Let me know in the comments below. Crypto market's going up or crypto market's going down? I want to hear from you. Please hit that like button, add that subscribe button, and I will see you guys soon.